number, this drop of 0.4%, was actually quite a surprise. Economists were predicting that there would be a bit of a wind back in inflation in these monthly figures, but not by this month. So we had annual inflation go down from 3.8% to 3.4%. There was also a little bit of a drop in the trimmed inflation. Now, this is another version of inflation which is less volatile. It's also the version of inflation that the RBA looks at when it's setting interest rates. Now, when we look at inflation and what was driving this number around, we've got some economists saying this data's pretty messy. It's the monthly figures that we've just started getting. But some of the things that are driving this are things like housing. We know that rents, for instance, a little bit stable, but still a bit of a problem. We've also had some things like clothing and furniture wound back slightly in price in these figures. Could be due to things like sales that have been going on, who knows? But that's what we've got so far. And so while this data is positive for Australia's inflation outlook after concerns that it was getting bad again, we do have those economists saying, you know, let's wait for a fuller picture. We also have a 3-month look or quarterly data coming in at the end of this month ahead of the RBA's next meeting in early Feb, where they'll be obviously looking at these figures very closely.
And so, there'll be more focus on that more significant figure that comes out. And it's actually later this month, is it? Later this month.
All right. So another round of inflation data, a lot more information to talk about. And while we've had all of that information come through, obviously this does factor into what the RBA could do around rate hikes. Now, as inflation was ticking up a bit again, we've had some of the major banks say, we might have rate hikes this year. In fact, 2 of the major banks have been saying there was a chance that as early as next month the RBA could rise. The cash rate's currently at 3.6%. I was just speaking to Luci Ellis from Westpac. Now, she's a former RBA governor assistant. She was one of the less hawkish predictions for rate hikes. Here's what she had to say to me just moments earlier.
If anything, this solidifies the idea. Look, there is some chance the RBA hikes. I think it is very obvious from the rhetoric and the media briefing that the governor did late last year that they have a view in their mind that, you know, Australia has a renewed inflation problem, the labour market being tight, you know, Australia only being able to grow at 2%. Now, at Westpac Economics, we have a more optimistic view about Australia's capacity to grow than the RBA seems to do at the moment. That's okay. Everyone's allowed to have different views. But so far, this is saying they might wait and see, but I think we really can't know that until we've seen the next month of labour market data, which comes out next week, and also the final December quarter data, so the December month and December quarter data for the CPI. The RBA did say it's going to put more weight on that quarterly trim mean number, and I think we really need to wait and see how that plays out in a couple of weeks' time.
So that's Luci Ellis speaking there, one of the chief economists of one of the banks that was being a little less hawkish in its predictions for rate hikes in 2026. Now, other major banks, NAB and Commonwealth, have been tipping a higher chance of rate hikes as soon as the RBA's next meeting in February. I'm now being joined by NAB's chief economist, Sally Auld. How are you doing, Sally? Thanks for joining us.
A pleasure, Amelia.
So, Sally, are you rethinking this year's rate outlook after these latest monthly inflation figures?
No, we're not making any changes to our forecast around interest rates on the back of these numbers. And so, you know, you're right, the numbers did come in a touch cooler than perhaps the consensus estimated, and that's okay. This is the second set of monthly numbers we have, so it does go some way in helping us firm up what our forecast is for the quarter. And I guess the way we would characterise today's numbers is to say they do take away some of the anxiety that probably did linger after the third quarter inflation release, where we saw some really strong outcomes both for the core measure and the headline measure. But there are still signs that some of the more persistent aspects of inflation, so particularly those to do with rents, those to do with building a new house, they seem to be lingering and are probably running a little bit too hot to be comfortable that all is well with the inflation story. And so, like everyone else, we'll be waiting for that quarterly number, which only comes in 3 more weeks. But we still expect that to print at 0.9 for the quarter. And we think off the back of a solid number in the third quarter for inflation and an economy that looks like it's basically operating at capacity with a tight labour market, the right thing for the Reserve Bank to do from a risk management perspective is just to execute what we would characterise as a really quite modest but relatively efficient calibration of monetary policy. So just take rates a little bit higher just to ward off some of those risks around an economy that might be running a little bit too hot and an inflation story where the starting point is not as optimistic as where the RBA had hoped even just 6 months ago.